Traders, what's going on? Jamie Saettele here with the Power Hour, FX, commodities, and sometimes crypto. But welcome. It is April 9th, 2021. So as we usually do, let's start. Let me share the screen first. And we should be good here. All right. So we should be good with the screen, I think. But yeah, as we usually do, I'm going to start with the US dollar index. So again, this is the FXCM Dow Jones Dollar Index, and this index is Euro, Pound, Yen, and Aussie. And this index was actually, so it was a pretty active week in FX, but interestingly, this index isn't going to have a lot of movement this week because, you know, the strength in euro essentially offset by the weakness in pound. So what we have here, if I just go to a weekly chart, you'll see the candle, you know, just a little pullback. And remember, we were looking for a pullback in the dollar as we came into the 200-day average. So for the most part, following the script here in US dollar, this is a 4-hour chart. And what we're looking at here is two equal legs down. So you can see here, I've got a little fib extension, A, B, C. Is it complete? Maybe, maybe not. We really don't know. The big level that I wanted to see for support is about 11,800. And that is the center line, or the median line of the fork that goes all the way back to the, hold on here, 2016 high, right? Okay, so it was January 2017 high. So that level, you know, that was support back here, August, September. You can see then it was support, resistance on a spike in early December. Traded into resistance again in March. We finally broke through here on March 23rd. And you want to see a pullback to test support here before we continue on our merry way higher. So again, we don't, you know, even if we do pull back to that level, we don't know for sure, you know, for certain if we're going to hold there. But, you know, my inclination is to believe that we do hold there simply because that was recently resistance. We broke through, look for a pullback to hold. This is actually a setup called the slingshot setup, where you break through a median line, pull back to it, and you slingshot off of it, right? So that's kind of what we're looking for in US dollar, generally speaking, okay? So with that, let's look at the other dollar index, which is DXY. DXY is similar in the sense that we have this little channel. Again, this is another example of a slingshot setup where we have a channel. We broke through the top of the channel. We've come back. We've kind of been trading along the top side of that former that former channel resistance line. We've also got you can see this line here, right? This is from the September 25th and November 2nd highs. That trend line, we came back. Now, when we held it 2 days ago, I was looking for us to continue higher. We did not. And this is a little trick. So, you know, so when I draw a trend line, and if you want to understand its importance, you can just click on it, extend to the left, and see if it touches any other spots in the market. In this case, you can see it does, crosses through this close from June, crosses through some highs here from November, as well as early October. So, you know, when that happens, I like to say that the market drew this trend line, right? Not me, because I'm just connecting these 2 points. And then we're seeing that the market touched and went through some other important levels, you know, going back to October of 2019 in this case. So less clear here to me than the other dollar index, because that one, remember, we know exactly the level that we're looking for to hold, which is again that 11,800. DXY, not real sure, and that will be seen as well when we look at euro dollar, because euro's kind of in the middle of nowhere. You can see that euro actually came into, this is the 200-day average, or 200 period average on the 4-hour chart, which is essentially a 50-day average. In fact, we bring up here, it's usually about a 50-day average. In this case, the 50-day average is a little bit higher. And you can see that if I go to a daily chart here. I'm going to get rid of this real fast. Okay. So here's the 50-day. Now euro, you can see I've got this magenta line here, and I've got circles on all the highs. That essentially that 119.15 area has been pretty important back, in summer and fall of last year. You've got all those highs really starting on in the end of July. You had resistance at that level. We broke through it. That was the final, the final leg. And really, once we got, this breakdown here, we had consolidated around that level. So, 119.15, an important spot. So I wouldn't be surprised if we continued lower next week from where we are now. However, I'm not in position to want to trade this right now. I'd be looking to trade, 1950 or so. And again, that is, see, the 50-day average is 1970 right now. This is the upper parallel from this fork. I don't have a whole lot of confidence in this parallel, simply because, we did not trade down to the lower parallel yet. The median line is not that clear. In other words, there's not a whole lot of, pivots off of it. But I would keep this in mind simply because it's not just this parallel, but you also have the 50-day average and some good horizontal consideration for resistance as well. You can see the low here from February 1950, and again the 50-day average. So the big levels to pay attention to: 1950.70. And when I look at some crosses as well, I think there are better ways to express a view towards a stronger dollar if indeed we do come down in US dollar and test that support. And that's notably going to be commodity currencies, which I will get to after we take a look at British pounds. So British pounds. Oh, 1 sec, my ear is itching me with these headphones. All right. All right, so you can see the steep trend line that we have here, right, back to last year. I do think last week when we looked at this, one of my favorite setups coming into this week was actually short pound, simply because we were coming into the underside of this trend line, right? This is the trend line from March 2020, very well defined. Again, it is steep. However, it does touch a bunch of lows, right? You had the November low here that we connected it with, but then you hit 2 lows in December, and there's, right on it. So did not quite get to that level, but it was close enough. We were actually looking to short. This is trading sometimes. I had ordered a short 139.25. Of course, we trade 139.19, and then it tanks. So just missed that entry, but that's all right. I'll be coming into next week looking for resistance probably around 138. You can see we've had a little bit of reversal to the upside here over the last couple of hours. 138 is going to be roughly 50%. 38.20s, 61.8. So In general, 138 is a level to look at for resistance in pound. Possible support, 35.60s. That's going to be the low from February 4th. And you've got just this line that connects the lows from early March and late March. So that's a level to keep in mind. Also, just a little bit lower than that, we have, you can see this, let me go to a different chart. Maybe it'll help kind of clarify what we're looking at. So this is a shift fork, okay? So this would be a regular fork. Hold on. This would be a channel, right? You can see here that's channel line. And then this would be a shift fork where, like a whole lot of time to explain exactly how these work. But what you're doing is it's essentially it's a shallower plane that the market's trading on, okay? And you can see that in this instance, look where the high was. It was right on the upper parallel on February 24th. So when you see something like that, you look for the lower parallel to provide support. In this case, that's going to be about 135, which lo and behold is basically the high from September, which is a little lower, 34.80, but you get the general idea. So I will be interested maybe in the long side on pound as we get to 135, or if we get to 135, for several reasons: horizontal level, and again, the lower parallel from the fork here. And that, kind of doing analysis here on the fly, I do want to see where some VWAP levels are. And in this case, we are inching higher. Currently, volume weighted average price from back to the September low is going to be 34.50. So, you know, as time passes, that's going to increase just like any average does as you've been going higher. And that would, you know, reinforce kind of the area around 135 as possible support. Hold on one sec here. Okay. All right, so that is cable. Now, let's go into some of these commodity currencies. So, at the moment, this is important, I reserve the right to change my mind on markets and direction, etc., etc. But at the moment, I am looking for downside continuation. Hey, Rizwan. Rizwan says 36.65 year open provided support in pound. You are correct, my friend. You can see right here. Oh, hold on for a second. This is live TV, and there's a cat that is stuck in this office. So I have to open the door because it's banging on the door. Hold on. Sorry about that. I heard that door bang and I was wondering what the heck that was. All right, so Rizwan, yes, this is British pound, and right you are, sir. This is the year open there, and you can see that we missed it by 15 pips, I guess. Good enough for government work on March 25th. And April 9th, today we also missed it by 15 pips, below the exact same low. So yes, but I am looking still, as long as we are holding, go back to that pound real fast. As long as we are holding kind of within this, downside channel, I am looking a little bit lower, 35.90 to 135 or so. So yes, good looks there, Rizwan, on 36.65 on the Euro Open. Okay, so here is Aussie, and I am looking for commodity currencies, at least, again, as the setup is right now, to maybe resume a little bit lower, or to resume lower, I should say. Okay. Here's the thing. Aussie, you've got this head and shoulders top, right? It really completed with the breakdown day here on March 23rd. And since then, we've just kind of, meandered sideways. So, just in simple forms, kind of think about a market in its various stages. You get the breakdown, right? And then you get some consolidation, make a little flag, what have you, make another breakdown. So several things here. You've got the neckline. We've tested that several times. Tested it here on March 30th, tested it, excuse me, this week on April 7th. This is also what I call a flat correction, or in Elliott, it's called a flat, where you get, little wave A up, take out the wave origin of A wave low, then take out the end of wave A high. So it's essentially an expanded flat, a diabolical pattern where it's kind of taking out, everybody before it makes a move. And in this case, that move appears to be lower. So you still have the channel, bearish channel here. And again, and we are coming off of significant resistance levels. This is a weekly chart, right? You can see the May 2010 low here. We came into that level close enough, turned sharply down. We've got a huge weekly bearish candle up here, right? Yeah, so for all the reasons mentioned, I am looking for Aussie to resume lower, okay? Ideally, resume lower from, well below this week's high. It looked like we were going to try to break down a little bit during European hours this morning, then we got a reversal higher. Let me go to a futures chart real quick as well. And this is a, solid, objective kind of way to, hold a directional view on an asset. But this is 2021 volume weighted average price, this thick line here. Essentially, be a bull while price is above and a bear while price is behind. So this is where 2021 started. And, we are now below that price. So just very, very simple from that perspective. Oh, you may also know, as I just scratched my face, that my mustache is gone. It's getting into the 80s here where I live, and it's simply too hot. So I had to get rid of it. All right, let's go to Kiwi. Kiwi setup to me, not as clear, at least on a near-term basis. You don't have as well-defined, setup as you do with the Australian dollar. You do have, this is the weekly chart, you do have that big candle, that big wick up here. So hold on here. With Aussie, I am looking lower. With Kiwi, I'm really just not sure. And really, the level in Kiwi that we've been looking for a test to really see what the deal is down here. This is essentially a neckline from December 2019 and September 2020. I want to see a retest of that level, give or take. I mean, you get that level 68.40, this level 67.50. Those are former highs up here. You know, it's real clear, right? Hold on here. Okay. Yeah, so you can see clearly 67.50 to, let's call it 68, right, is going to be the huge level to pay attention to, excuse me, in Kiwi. And, you know, with that, I'm just going to kind of keep it simple here. Again, with Aussie, you've got a pretty clean near-term setup channel, all that. With Kiwi, you do not. You do have a very, very, very clean level in 67.50 to 68. However, going to our futures chart, if we were to get, you know, a decent push higher in Kiwi, you got two levels to pay attention to: 71, and then 2021 VWAP, which is 71.90. Okay, 71, you can see clear as day on the spot chart. Starts here. And support here, support here. So you'd look for resistance at that level. And that's about it for Kiwi. So 71, huge resistance. 67.50 to 68 is really a massive test for possible support. And yeah, I'll leave it there. Let's check out dollar CAD. Okay, dollar CAD. Remember we looked at on British pound, we looked at the shift fork from the March 2020 high. We have the same thing here in dollar CAD. This is a shift fork from that March 2020 high. British pound, sorry, was the 2020 low, of course. And look at the center line from that fork. Now, again, just like with pound, except this would be the opposite, I am looking for a move back towards the upper parallel in this case, which depending when and if we get there, but you know, if you get there by mid-month, it would be intersect these highs here from late January, which is gonna be 28.80. You know, so that's just a good, you know, level to keep in mind because you have the intersection of the parallel and the high. But you can see the action this week is pretty important. So look at the center line. You can see the resistance there. Resistance here in late February, early March. Resistance here in late March. Resistance here 2 days ago, right? So I was looking for us to hold 25.60s. That is was the open for this week, and we came into it here, and we did at the end of the day yesterday. We did shoot higher, but during European hours, everything reversed, and we may be looking for at this point next week. We might get a drop down towards here. So here is 24.70 to 24.85. Okay, so that might be the setup now for dollar CAD, is to look for a hold down in this region. And there's several things there. One, you've got the 75 line. You can see here the the holds here, right? Reaction here, reaction here. So look for that level. It's also the 618 retrace of the rally from the low, as well as what we call daily reversal support. And We'll zoom into that so you can see what it is. You can see the low day here, which is a big reversal day. The close of that day, right? That is what we're looking for support. So the fact that it is very close to the 618 retrace is actually, I should say, reinforces the idea of that level as one of importance. All right, so before we continue, quick note. So as you know, I'm working with Scandinavian Capital Markets, and they're based in Stockholm, Sweden, but we are looking for profitable money managers. So, we have clients all over the globe that are looking for more strategies to invest in. And if you are a profitable trader and you would like to get into managing money, we can fund your strategies with up to $2 million. So come show us your skills. To register, go to scandinavianmarkets.com/fundmytrades. Again, that is scandinavianmarkets.com/fundmytrades. Okay. All right. Now back to the charts. All right. So dollar yen. Excuse me, allergies are pretty bad right now here in St. Louis. Pollen, drive your car around, you come in the garage with pollen all over it. All right, daily chart here. We are starting the channel from the October 2018 high. Now we did break above it on a daily basis. Look at it on a weekly basis here. You can see the poke above last week, and then this week reversed everything to the downside. So you remember last week, I actually think the title of last week's stream was something along the lines of like yen crosses. We were looking down, lower, and yen crosses. And this week kind of reinforces that idea because we have a fake or a false break to the upside above this 2018 2020 line. And again, this is a channel. I have it here, and I have a parallel extended from the low here in March 2018, which hit this COVID low last year, by the way. All right, so I have the markups here. All right. All right, so here we have a beautiful, see a little circle there. That was last night's update. We were looking for resistance up into about like 109.96, and I actually think the high might have been 109.96, and it was. So, yeah, looking for us to resume lower. Pretty simple, really, with dollar yen. Let me see where the 618 is on this. 618, so just a bit higher, 110.20s. But yeah, coming into next week, I do like looking at dollar yen. Yen cross is generally on the downside. I know that sounds weird because we were looking at US dollar, that index, to maybe base, but even though we have possible support a little bit lower. But again, trade each setup. Don't apply it, just the US dollar analysis, just blanket to everything. And you could see that this week. For one, you could have, excuse me, you could have US dollar come off some, base, and then you could have euro, turn higher, euro, pound, Aussie come off, and dollar yen could still come off, right? We saw that this week. You had the dollar stabilized, but the euro is actually pretty strong this week, whereas the pound was weak. So don't just apply the US dollar, possible direction to, everything that you're looking at dollar wise, right? It is easier, I would say, from an analysis and trading standpoint when you have, a dollar centric market, whereas everything's kind of making sense, but that's not always the case. All right. So that's dollar yen, pretty simple, false break to the upside. Resuming lower maybe next week, looking at, where we traded to this morning, to maybe 110.20 as possible resistance. But now I'm going to get into some other yen crosses. All right, so might as well just start with Euro Yen. Again, we're still looking maybe for a little bit more strength potentially in Euro Yen. You can see the line that goes back to the 2012 low, and then I've got this line here that connects highs back to 2020, and we reversed back here on March 18th. We've come back to test that high. I would like to see if we could try to test these lines here, right? Especially, make this thicker. Hold on. There we go. So this is that line from 2012. You can see the importance, and that was kind of as a pivot. So I'd really like to see that try to get tested, and that's going to be like 131 and change. But if you're looking for a trigger, there it is. So again, excuse my allergies here. I'm sure that's annoying. Not much I can do about it right now. But yeah, your trigger here is this trend line. You can see here, this is the trend line back to November. And, you know, kind of caught between a rock and a hard place here with Euro Yen. Break down here, take a short, look for a test of that 200-day average, the top side of this blue line, which was the line off of 2014 and 2018 highs. That was resistance for a minute, and that's where we would be targeting. But as we head into next week, that area just above 131 is the level I'm looking at in Euro Yen. Okay. Pound Yen. This is one that we looked at last week, and I think this was the favorite setup coming into this week. And we were looking for resistance at 153.85. We did not get there. We got to 153.41. But when I zoom into this chart, you can see the sharp drop that we had this week, right? So I've got this bold line here. This is going to be 151.60. Which is going to be between the 50 and 618. But generally speaking, you know, look, that level, 151.60 to 151.90 is going to be where I'm looking for resistance as we get into next week. If I go into the daily chart, you can see the bounce level, which is essentially this low here from March 24th, would make sense. That is the center line as well from the channel off of the March 2020 low. You know, so I'm not calling for this prediction of this pattern. However, just for visual purposes, you kind of see, you know, look, if you have a topping process here, right? Markets tend to trade in certain manners. So, you know, take out the low, maybe get a bounce, blah, blah, blah. You can see I'm getting that little head and shoulders action. Again, I'm not predicting it's going to happen. I don't know what's going to happen. However, would it surprise me if we got something like that? No, it wouldn't. Now, it's important to pay attention to the center line here, okay? The action here is subtle, but you can see, probably see it better on an intraday chart. You can see the action we had here on the center line. This is why this is important. So it was resistance, resistance, and then we just broke through it here in mid-February and then just off to the races, right? So watch this center line, because if you get something like this, where it's basically the opposite of what happened back here, and you get a breakdown level, okay? And you want to go with it. If you get something like this, and this is my favorite setup, right? You come down through the median line, then you rally into it, and then you look to sell that, right? So the median line then becomes resistance. Why is that my favorite setup? Because risk is small, right? You're trading into the level, and you're going to know right away if you're wrong. So and that's all we can ask for, right? Is tight risk. Okay, so that is pound yen. Again, pound yen is still one of my favorites as far as the bearish setup's concerned. The question is, do we rally a little bit more next week, 150, 160 to 152 or so, or are we going to go for a breakdown sooner than later? But really, the biggest thing here is to pay attention to the center line on pound yen. Okay. Let's get to some others. We got Aussie yen. All right, Aussie yen. Similar to pound yen in that we had, or not pound yen, excuse me, but euro yen in that we had a long-term trend line. We were looking for resistance and we didn't quite get there. However, Aussie yen may be a little more mature than pound yen in its little topping process that we have here. So this is one of two things, right? It's either a triangle top or it's a triangle before we go for another leg up, right? This is an Elliott triangle. A, B, where B is higher than the origin of A, C, D, E. If that's a bullish triangle, then the market's going to attempt to move higher probably from about where we are, this morning. My view is that it's not, and that we're going to try to break down, but pay attention to the neckline, which is going to be 82.50. And that's that. You can see that this is a good example of daily reversal resistance holding as resistance, right? I've used that term several times during this webinar, daily reversal resistance, daily reversal support. You can see that the high here, this is the reversal day high. That was from March 18th. And we have that thick line on the close of that day. And guess what? It was resistance not once, twice, but thrice times. Okay? With the most recent being on Tuesday, April 6th. So you can see how precise that method can be at providing support and resistance levels to work with. All right, last cross here for yen and last FX cross, and then look at some commodities real quick. And take a quick look at indices. All right, so this is CAD yen, and we're looking at the same thing here that we have been for a while. Just the channel from the March 2020 low, and we've been banging against the top of that channel. Not quite a month, but you can see it started on, I guess, March 15th. Resistance came off, back to a new high. Resistance came off. This is a chart from last night, and I was actually looking for us to maybe extend a little bit lower and get support around 86 and change before we bounced. That did not happen. Instead, we bounced. So this is the level I'm looking for, resistance. We're trading right at it now. So again, based on my dollar CAD analysis, where we might be slipping a little bit lower before we turn up, this might not be right. However, the big thing here is simply the channel. Okay, that's it. All right. How about some commodities real quick? God, these levels are just ridiculous sometimes. Okay, silver was looking for resistance to hold here, and I'm not really sure what's going on right here with silver. We've got tried to break higher, pulled back, back beneath the channel resistance, and now we are kind of trading right at it. So frankly, silver right here is not all that clear to me. You can see it's literally smack dab in the middle of a range that's been going on since August of last year. You can look where that high was from yesterday, and it is like it's like center of the range, right? But you can see here you've got, you know, some decent pivots around this level over the last not quite a year, obviously, since last August. But yeah, this is a tough place to work from because you're right in the middle of a range. See if we make this a shift fork and see if we get anything else. So that could be something to work with there. Hold on. So again, a shift fork is going to be less steep of an angle of a plane. And what you're looking for when you're, you know, doing slope analysis, median line analysis, same thing, synonyms, if you will. You're looking for reactions on the center line or reactions on parallels within the channel, within the structure. In this case, you can see that we do have, you know, you do have some interesting action on the center line, right? So it's not crazy to think that this is where we could be, we could trade lower from this level here. But again, silver is not all that clear to me. Gold is actually much more clear to me. And I'll pull that chart up. This is also a chart from last night. You can see that, or we were looking at higher in gold last night too, or last week, excuse me, in our webinar. Came off of this channel support. It was just absolutely perfect. Now we have a bullish fork to work with. You can see center line, okay, pullback. We were looking for support at 1730, and that's pretty much what we got this morning. This is what we call a slope confluence, okay? You can see here support, right? Resistance, right? Resistance. Zoom in, you can see break above support here. That was on Tuesday, I believe, or no, it was Wednesday, and looking for it again. So if we do come off a little bit next week to make this perfect, you'd have support basically right around here on 1729 or so. But generally speaking, we are still looking higher in gold, and we're looking towards this low here, which is 1785. That's going to be the center line as well from the channel that goes back to the August high. And you can see that center line was literally perfect resistance in February. So that's your key level to focus on in gold. Copper, when we looked at copper last few weeks, it's really been all about this trend line back to the 2020 low. And this is a really important chart to focus on, especially if you're trading Australian dollars and paying attention to that topping pattern that we've had, because if this breaks, it's going to put a little wind at the sails behind an Aussie short, more than likely. Okay, so pay attention to that copper chart. And again, my view, or opinion, if you will, is that copper will break down because we're coming off of this significant level. This is the underside of a trend line that goes all the way back to 2001. Okay, crude oil, pretty quiet this week. I'm kind of cautiously looking lower. We had a real clean 5-wave drop here, and then we've had a corrective bounce. Okay, but everything here looks corrective too. So we could have another leg up, because if I get nitty gritty on this from an Elliott perspective, you got 3 waves up, 3 waves down. You get another rally here. That would be what we call a flat. Or we looked at an expanded flat in Aussie earlier. We could just have a regular flat here where you don't take out the low or the origin of A, what have you. So A, B, C, maybe one more pop, surprise rally, and then lower. But yeah, crude not especially clear to me at the moment. And finally, let's take a look at indices. And really, only thing I'm paying attention to up here is S&Ps, because I'm looking at this, expanded expanding diagonal, excuse me. This is highs back to November, and it crosses every high. I mean, it's an extremely well-defined line, and that's going to be in the 4140s, depending on when you get there. If we get there, if it takes longer, it might be 4150, but just follow this line, okay? All right. Okay, so if we have questions, I would love to take them. We have a question from a YouTube viewer asking about Euro Pound. Absolutely. That's a good one to look at this week because you've got quite the reversal higher. So look at that candle. So let's start by looking at, where we're coming from. What's that low this week? It's like smack dab on the low from March of 2019, interestingly enough. So look at that. It looks to be some seasonal stuff going on here, because this is March 2019. This is March 2020. This is not quite March, but late April. You get the idea, of 2021. And just look at it from a very simple perspective. What do you have going on here? Ever since October 2016, it's a big range, right? I actually want to show you, I want to see if we have, this is actually right here. We've got these magenta bars. These are weekly reversals. This is in pound yen. Gosh, allergies are the worst. All right. All right, so what I have here is a euro pound chart, a weekly chart, and we're looking at reversals with a volatility filter from 1 year highs or lows. Okay, so you can see the ones in the tops over the last 5 years have been pretty good. But yeah, we're going to get one this week, as you can see here. So, the question here from the YouTube viewer asking about euro pound, I'm not exactly sure what your time frame is, and that's, if you're asking a question, try to let me know, what you're looking at from a time frame perspective, because I could be looking at a weekly chart or a daily chart, and you might be looking at a 1 second chart. I have no idea what's going on. But from my perspective here, we have this big weekly reversal. So, from the bottom of a massive range. So I'm looking higher. The levels that I'm looking at, I'm going to pay attention to this channel. This is the channel that goes back to the March 2020 high. And again, look at the center line here. Perfect. Beautiful action. So pay attention to that center line, which is going to be in line with this high. That's a decent level to pay attention to for a pullback. Right? That's going to be 87.30. Again, you don't have to pull back from there. If we break above it, then look for the level to hold as support. But again, my base case, if you will, is to look for a pullback from that spot. And then you've got this impulsive advance. So if you pull back from it, you're going to look for a corrective decline to hold. And a good place to start for a pullback is to look at the 200-hour average. But one thing at a time here. Look for this level 87.30 to provide resistance for a pullback, and then look to buy that pullback. So there's so many ways to play this, right? We have a huge weekly reversal, but we're coming into resistance. You could look to short that, or you could wait for a pullback, look to buy that, or wait for a break above and try to buy the pullback into the top of that line. So I do hope that helps. If anything, just know that you have this well-defined channel from the March 2020 high, and I would draw that in on your chart so that you could follow along. All righty. So before I wrap it up, I am going to remind you that we are looking for profitable money managers to join our ranks here at Scandinavian Capital Markets. So we've got clients all over the world that are looking for strategies to invest in. So if you are a profitable trader and you would like to become a money manager, we can fund your strategies with up to $2 million. You need to go to ScandinavianMarkets.com. Excuse me, ScandinavianMarkets.com/fundmytrades. Again, that is ScandinavianMarkets.com/fundmytrades. So go there, register, and come join us. And other than that, I wish you all a very, very wonderful weekend, and I will talk to you next week. All right, take care.